Welcome back, learners. As I promised you, part two of our lesson on the notion of national income. We are going to begin with the net property income from abroad and the lesson integration. Net property, net property. Net property income from abroad. This is the difference between property income from abroad and property income paid abroad. That gives us what is known as the net property income from abroad. So we can get that using the formula that net property income from abroad can be gotten as that is property income from abroad minus property income paid abroad. We moved on to the next aggregate or the next basic concept. That is the concept of depreciation. Depreciation is a loss in the value of capital assets over time or part of total output of capital goods required to replace obsolete or worn out capital. So that is depreciation. The next we move on to the adjustments for financial services. Adjustments for financial services when interest received by savers and bank is counted twice, there must be that adjustment when measuring national income using the output method, as we are coming to see shortly in our subsequent lessons. We move on to the next basic concept, that is the value of physical increase in stock. Value of physical increase in stock is simply the value of unsold goods or semi-finished goods, the semi-finished goods which are yet undergone market transaction. That is value of unsold goods, semi-finished goods that have not yet undergone market transaction. So it is usually calculated as getting the stock at the end of the year, that is 31st of December. So when we get this, we are going to have the change in stock or the value of physical. The next concept we are looking at is transfer payment. Transfer payment is payment made for which there is no corresponding contribution to current output. Examples of such payments include unemployment benefits, pension allowances. We move on to the next, which is gross domestic. Gross domestic. Gross domestic fixed capital formation. Gross domestic fixed capital formation is the total spending on newly created fixed capital goods plus new residential houses constructed within 1 year. We look at it using the formula. Gross domestic fixed capital formation is net domestic fixed capital formation, otherwise known as net investment, plus depreciation will give us gross domestic fixed capital formation. We can look for the other variables. For instance, net investment will be giving us gross domestic fixed capital formation minus depreciation. Another word for depreciation is capital consumption. Capital consumption, another term for depreciation. Now we move on to the next, which is gross domestic product. Gross domestic product or GDP. So it is a total monetary values of goods and services that is produced within the national economy, regardless of who owns the output. Take note, regardless of who owns the output, meaning that the output can be owned by nationals or foreigners, but so long they are produced in the domestic economy, it constitutes the gross domestic product. The following the gross domestic product is the gross national product. Gross national product or the GNP. So it is the total monetary value of goods and services produced by national resources, irrespective of where the resources are located. It means the resources can be at home or they can be abroad. So the total of the production using the national resources, whether at home or abroad, constitutes what is known as the gross national product. Now, we are going to move on. In order to summarize this, we are going to go to our lesson integration. Lesson integration. Remember, economics is practical. We cannot end a sweet discussion as such without going into the lesson integration to see how it is applicable to our everyday life. Mr. Chofo plans to export his products to Nigeria and wants to get information on the real national income of that country. His Nigerian friend gave him the following information, which I'm going to put on the board. So we get the year. The year under consideration is 2023. We have the money national income, which is 480 billion francs CFA. We move on, that is average price index of this year. Average price index of the year, that is 125. Now, we have as a task in front of us, from this figure, question number 1, what is meant by money national income, as seen on the table above? What is meant by money national income, as seen on the table below? Question number 2. Provide Mr. Chofo the information he needs. So that is a task we have in front of us. I know you are already trying it. So let's verify our answers, our solution together. So the first part is straightforward. Of course, what is meant by the money national income? Of course, it is national income measured at current prices, or national income measured in monetary terms. Now we move on to the second question, which is applying what we have studied earlier. Now, to get the real national income, we'll be taking the national income, or the money national income, over the current year price times 100. Remember, we said the base year is always 100. So that is the base year, which we have given as 100. Now we can now substitute. We substitute real national income is equal to, from our table, our money national income is 480 billion francs CFA over the current year price, which is given as 125 times 100. And that gives us 300, if you calculate very well, 384 billion francs CFA. Please take note. Some of you will write 384 francs. That is completely wrong. So in the GCE, you indicate your answer, you lost the last mark for accuracy. So the figures were given in billions of francs. So your last answer must be in billion francs CFA. So anything short of this, you are going to lose marks for accuracy, which you shouldn't mix. So we have as assignment to keep you prepared for the next session on eSchool. Identify the various methods of measuring a country's national income. It was nice having you out there. Stay tuned to the eSchool platform. So make sure you like and share this video. The lesson will be put on description. So make sure you download the detailed lesson so that you can follow better. See you next class.